My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey folks, welcome back. Let me ask you a question. If you are into the single family housing investment space, have you been kind of tempted to get into multifamily because you think that's really the only way to scale? Well, there are other ways to scale, and our special guest zooming in from Philadelphia today is Peter Neill, and they are taking a commercial approach to single family houses, especially in the workforce housing space. So, Peter, welcome to the show. Great to have you.
Dave, it's great to be here. Thanks for having me.
All right. Well, hey, Peter, why don't you give us a quick big picture overview of what it is that you guys do, and what does your real estate investing business and portfolio look like as of mid-September 2024?
Yeah, so we invest, and I'm co-founder, partner of GSP REI. We invest in single family workforce and affordable housing. And to give you an idea of like our buy box, we're typically buying dilapidated homes. So homes that we can buy at a significant discount to market. We have the construction and the property management in-house. So what we'll do is we'll go in, we'll rebuild, we'll redevelop, renovate. And our goal really is to hand over almost new construction to our tenants. So we'll lease. We are long-term buy and hold investors. Not that we don't occasionally sell, but our main focus is to hold properties as rentals. And then from there, we'll continue to manage in-house. Our strategy is very much a BRRRR strategy. So we're
Yeah.
buying, rehabbing, leasing out, and then refi and just rinse and repeat. So like I said, our focus is workforce affordable housing. So typically property values are going to be under 250,000.
Yeah.
And we tend to focus in areas where there's a strong demand for that. And there, you look at the data, there's a strong demand for that all over the country, urban, suburban, rural areas. Like you said, I'm based out of Philadelphia. We invest in the Philly area. We do a lot in Baltimore, which is just a short drive for us, under 2 hours. And we do some in South Jersey as well, but it's a little harder to make the numbers work there.
Got it. Got it. Got it. Okay. Now, when you're talking about a commercial approach to single family housing, what does that mean exactly? So you describe doing BRRRRs. Everybody can get their head around that. I think you're probably doing this at a scale that most of the rest of us haven't quite got our minds around. So give me an idea of
Yeah.
what does that look
Yeah,
like for you guys?
I think that's the core. By what I mean by that, the core meaning is doing single family at scale. And similar to multifamily, there's a lot of efficiencies. There's a lot of economy of scale, cost efficiencies, labor efficiencies, things like that. Just overall systems and processes and that kind of thing. When you can do single family at scale. Now, there's also plenty of headaches that can come along with that as well. So it's very important to that strategy is not right for everybody, right? It's going to
Yeah.
depend on what your goals are at the end of the day. For us, we are full-time real estate investors. This is all we do all day, every day. And my partner Ron, he's been in the construction business as a general contractor, construction manager, consultant for the last 20 plus years. So even before we started, we had the foundation laid to be successful in the single family business at scale. We invest in urban areas, especially an area like Baltimore, where the opportunity to buy there's dilapidated homes I was telling you about, homes that you're typically going to be purchasing for less than 50,000 and then putting upwards of 80 to 100,000 into them or so. We're in areas where it allows for us to do that repeatably, day after day after day, week after week after week. There's a massive supply constraint for those types of properties, and there's massive demand. So I think that's the way we look at single family. It's certainly, there, and then two, you can, with scale, you can get significant discounts on the construction side. You can, from pricing and, on materials and things like that. And then there's just maximum efficiencies with getting really good guys on the crew that are working for you on a daily basis, on the
Yeah.
Monday Friday, that kind of thing.
You're keeping them busy
So
all the time.
exactly,
Well,
keeping them
so
busy.
I'm trying to get my head around this, Peter. So what does it scale mean to you? So give me a snapshot. What does the portfolio look like today? How many houses or how many units or how do you guys count it? And
Yeah.
what kind of volume of deals are you doing on a monthly or annual basis
Yeah,
altogether?
yeah. So in August, we acquired 11 properties. Prior to that, I think it was 9 properties. So we tend to have over 10 projects going at any given time.
In
The
those three
portfolio,
different markets, like
primarily
straight
in Baltimore right now.
Baltimore. Okay.
Philadelphia is also been a challenge to find good deals.
Mm.
A lot of New York money came to Philadelphia a few years ago, drove prices up pretty significantly. And there's just been a ton of attention in that market, not like I said, by New York investors, but investors all over, and even institutional, sub-institutional type investors.
All right. So you're focused on Baltimore. Got
Baltimore
it.
is where we can, continually buy in our buy box on a weekly basis. So our portfolio right now is over 130 rentals. Over the last 5 years, we've acquired well over 150 properties. Most of them we've held, but like I said, we do occasionally sell property as well.
Mhm.
I think it's important to have a mixture of properties that you're going to keep for long-term use, and then other properties that you're going to maybe sell. And then one thing that's nice about single family is you have that option. Sometimes you get into something thinking this is going to be a long-term hold. And then for whatever reason, maybe, things are a little bit more expensive than you thought, or the area is maybe not what you expected it to be, or something like that. There's multiple reasons, right? That you say to yourself, well, let's just sell it and at a profit up front, and then move on and put that into ideally another long-term hold. We did that in Jersey. So years ago, we did a lot of fix and flips in New Jersey. Very hard to make the numbers work for cash flow long term.
Yeah.
So when the market really started to go up post COVID, the product that we were holding there, we decided to sell off,
Mhm.
and we've invested most of that into the Baltimore area at this point.
So if I'm crunching my numbers properly, would it be fair to say that on average you're probably doing 5 or 6 deals a month right now
Ideally, yeah,
on
yeah,
on average?
exactly. And we'd like to get that to 10 or more.
Mhm.
It's always You're always constrained by the capital you raise, right? So it's always the dance between capital acquisitions and execution. And for us being vertically integrated, we do want to continue to do all the construction in-house. So it's
Yeah, no,
always
how
how
many
much.
crews do you have to manage that volume
Oh,
of deals? That's a lot of properties.
but and we have crews in the Baltimore market, and then we have crews in the Philadelphia and the South Jersey market. Each market has about 4 crews each. And there's a few guys on each one of those crews, and then there's a deep network of subs in both of those markets. In the Philadelphia market, we do a lot of outside work. So in order to
Oh, okay.
keep those guys
Yeah.
busy, in order to keep them around, my partner Brian, who runs the day-to-day on the construction side, works with a lot of other investors, guys that are fixing and flipping mostly. And then he does a lot of work with retail homeowners as well, do kitchens,
Okay.
bathrooms, decks, roofs, you name it.
Well, it sounds like you're well set up. So if the market shifts and it becomes more appealing for you guys to do your own deals and hold on to the properties, you got the crews still in place in Philadelphia. Otherwise, you're keeping them busy and still making money doing it for other people.
Ideally,
Yeah.
yeah. And if as we get larger, as we have more presence and raise more capital, we also continue to do more and more internally. But the Philadelphia market just has not presented the amount of
Yeah.
deal flow that Baltimore has over
Well,
the
it
last.
sounds like you're keeping busy with Baltimore, so that's good. So
Yeah.
you talk about your partner. Sounds like he's in charge of the construction side of things. What's your primary role in the company, Peter?
Yeah, so I came from the raising capital world. I when I got my start right after college, raising capital for a distressed mortgage investment company. So I started in marketing and sales, and the company I worked for sold courses and things like that, and very quickly transitioned to investor relations and raising capital for that company's various fund offerings. So
Mhm.
my background was in raising capital, was in structuring funds, and then that firm was a small boutique firm that has been becoming more and more corporate. So
Mm.
that's another thing that I like to think I bring to the partnership, is seeing what it takes, and the people and the processes and systems that you need to put in place in order to scale. And then, now with GSP, I certainly play a very heavy role in the overall management of the company. We're very fortunate to have a very solid team. So it's kind of my partner, Ron, is the managing partner. I work alongside him. I have another partner, Wade. He runs all the finance and the accounting. Ron and I run the property management and the construction management. I have my partner, Brian, who runs the construction as a whole. And then we have a guy who runs the day to day in Baltimore. Another guy runs the day to day in the Philadelphia and the South Jersey market. They run the crews. They bring the guys in and out. They train them. They, make the hires and fires and things like that. And then I also have another partner, John, who runs the property management, and we have somebody in Baltimore who runs the day to day of that. So
What
it's
about
very important to put
acquisition?
the
What about
yeah.
generating leads for
So
deals?
Ron and I primarily run the acquisitions.
Uh,
One thing that's nice about Baltimore that we don't see in the Philadelphia area is they have a very strong um, uh, presence on online auctions. So you
hmm.
can find a lot of deals through online auctions. It's almost impossible to find a deal at an online auction in the Philadelphia area.
Yeah.
But Baltimore has a very good online auction. There's a few different ones, one especially Ashland Auctions, which you'll see a lot of product on. And then we keep a network of real estate professionals, so wholesalers,
Hmm.
agents. We buy on and off market. So mostly everything runs through Ron and I. And then we kind of, as a crew, work together as like an investment committee. But for the most part, what we buy is pretty cookie cutter. And we're typically paying price points where we're going in with plans to fully renovate, strip it down to the studs or even the brick and rebuild and hand over almost new construction. It helps with the systems and processes. So the guys are putting in, the same flooring, same cabinets, same paint colors, same windows, all that kind of stuff. We tend to buy in bulk. Between what we do on a regular basis and then the work we do outside as well. And we have some great relationships there. So occasionally we'll get discounts, we'll change it up here and there, but the quality always has to be on the good side. We are going to manage these long term, so that's important for us. And then just kind of rinse and repeat. You know what I mean? So we
Yeah.
do take certainly a cookie cutter approach to that. And that's a big part of what we do is managing the day to day
Oh,
on
it's
the
all about the efficiencies and
efficient.
making sure.
Exactly. Yeah.
So I was going to ask you, Peter, the capital side of things, you got a huge background on that. When you're raising money for the deals that you're doing, let's say in Baltimore, for example, is that through a fund or is it a investor per deal type thing, or how do you typically do that?
Yeah, we've never done investor per deal.
No.
It's something we've talked about,
Mhm.
but yeah, we've always raised capital through a fund, and it was one of those things where I did what I knew, coming from the distressed mortgage company. I had great relationships and a great network of investors that liked me and championed me and all that kind of stuff.
Yep.
So we were able to give them a product that was similar but different. I think the market should, and does perceive real property is less risky than they do distressed mortgage notes. So we were able to kind of craft an offering that feels very similar to, I like to call it like the in-house private credit fund. So you have uh what we see here locally, it's usually about 12 and 2 points on a private loan. Yeah, and that could vary depending on your track record and things like that. But on average, you tend to see around 12 and 2 points. In our funds, we pay between 10 and 12%, and it feels very much like a private loan on the property. So it's technically an equity investment, but it feels like debt. So
Mm.
it's interest only payment with a balloon payment at the end of the term, or you can keep it rolling if you'd like. And this way, you're collateralized to the entire portfolio and not just an individual property. And we structure it in a way that if we miss a preferred return payment, investors take voting rights over us. So it's a way of putting our money where our mouth is. That kind of feels like a deed in lieu.
Mhm.
So instead of having to go through the foreclosure process and that kind of thing, we miss a payment, they take full voting rights. They can take control over the assets in the fund, hire fire management, that kind of thing, liquidate assets. So we're very motivated as long-term investors. We retain the upside in the fund. We don't want to lose control over the assets in the fund. We want to continue to manage those in perpetuity. And one thing that myself and my two partners get along with is our long-term approach to investing and kind of, building a generational wealth building portfolio. And I think the only way you could really do that properly in single family is to build it at a scale that affords good management and good people.
Mhm.
It's difficult, you leave a couple properties to your kids. If they have no interest, then it could be hard to justify, full-time management for that.
Yeah.
Especially over the last couple of years with pricing. And if you don't have efficient scale, if you don't have enough scale, it's very hard to create leverage when you're dealing with contractors, plumbers, electrician,
Oh,
handy,
definitely.
all that
No,
kind of stuff.
scale makes all the difference for you. So, Peter, for folks here who are just kind of getting into the capital raising side of things, you've been doing this for a long time, so you know, uh, it's second nature to you. But looking back, knowing what you know now, if you're kind of starting from scratch with raising private capital, what would be some of the first things you might do?
Yeah. Wow, that's a really good question. And one thing I would say is, it'll be 10 years doing this in November, and things have changed a lot, and,
Yeah.
and believe me, I ask myself that question all the time.
You have to
I
reinvent
wish I had a
yourself all
good
the time.
answer. The internet has changed things so dramatically. When
Yeah.
I started raising capital, Bigger Pockets was a small website. It was just like relatively unknown in the real estate space.
Yeah.
Not everybody knew about it.
Yeah.
Uh,
Yeah.
there wasn't millions of people on there like there is now. So that was a way to be able to stand out. And we raised a lot of capital from people from Bigger Pockets. And my boss was on the podcast, and one of those early episodes, is that when people would go back and actually listen to every episode. I don't know how many
Yeah.
people do that now, but and two, back in those days, it was unheard of that you were finding deals on like Facebook. I can still remember going to a meeting. This was like one of those launch pads for like a business idea, like an incubator kind of thing. And I was talking about this creating a website where you could raise capital for other people's investments and things like that. And Fundrise was around, back in those days, but it wasn't what it is today. And there wasn't all these other, I think, like, what was it, realty shares might have still been a thing back in those days and all. And the guy told me I was absolutely nuts. He was like, that's not how things get done. This is a face-to-face business. It's a handshake business. And you see how much that's changed. I go on Facebook now, and uh, every other post I see is a sponsored post for a fund. So I would say things that I wish I did, when I started GSP to today. It's like when to plant a tree, right? You wish you did it,
Yeah.
20 years ago, but the best times to do it today is create a really strong online presence. That's where the future's now. It's happening right now. It's going to continue on that way. I think getting good at video and communication in that way, because one thing I see now on LinkedIn is just I question so much of the content as being AI generated. You
Yeah.
read these
Sure.
long, long posts where you just think, who the heck has the time to read that stuff? And then you just get the vibe that if this person's as busy as I probably think they are, there's no way that they're sitting there and writing that long, long post. You know what I mean? So I think in the future, the ways that people will be able to really kind of separate themselves is creating video content. And I think a lot of people, it's human nature, they feel uncomfortable doing that. I know I do. As a sales guy, as somebody who's selling shares of a fund and in investor relations, people will say to me all the time, like, "Oh, it must come easy for you, doing presentations and going on stuff like this, and it must come easy." It doesn't. I always have to force myself. You know what I mean? I get nervous. I always, even though I say the same stuff all the time, I always think, what am I going to say? You know what I mean? And
Yeah.
and I'm always learning. Like even 10 years later, I always find new and interesting ways to say things that I never thought of before. And always listening to people when I have conversations, because so many people come at this when you're dealing with accredited investors from all kinds of different backgrounds, from
Yeah.
they could be more emotional or logical depending on the kind of person and the job that they work and all that kind of stuff. So I would say, just creating a really strong online presence and trying to find ways to add value to your investor. That's another thing on LinkedIn. I think so many people it's like going to an industry event, where they're sharing information with other people in the industry. Don't forget who your client is at the end of the day.
Yeah.
And
Yeah.
like
Yeah.
they
Yeah.
might not understand
They
what
don't
the
they don't know the jargon and NOI and IRR and all
exactly,
that stuff.
exactly.
Yeah.
And I see that. I just saw a post the other day where it was like, the I think yield on cost is the
Yeah. Yeah.
best thing. And it's like they don't know what that means. You know what I mean? So a better piece of content might be explaining what that is, you know what I
Yeah.
mean? Or
And even then, what
do they
average
care?
doctor that might be your investor gives a crap about
Exactly.
yield on cost? So yeah.
Exactly. It's all
So,
about how much am I investing? How much am I getting back? When am I going to get it back? And in what time frame? And
and how do I
what is
know
the
that you're
risk
telling the truth?
associated?
And how do
Exactly.
I
Yeah,
know you're
exactly.
telling the truth?
Exactly. Exactly.
Awesome. So Peter, time flies when you're having fun and people want to connect and find out more about you. Where should they go?
Sure. Well, find me on LinkedIn. I would say too,
With a guy with the big log posts?
Exactly, exactly. GSPREI.com is a great place to do it. My phone number's on there. You can call, text me on that anytime. You could schedule time with me on there. So GSPREI.com. Like I said, I'm on LinkedIn and Facebook too. And also always feel free to reach out. Happy to talk to anybody.
Awesome. Well, thank you very much and keep up the good work.
Hey, thanks for having me, Dave. It was a great conversation. Had a lot of fun.
All right, everybody, take care. We'll see you on the next episode. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now, at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.